Hey everyone, and welcome back to The Explainer. Today, we're unpacking a really fascinating shift that's happening right under our feet in the real estate market. We're going to analyze the big picture across Canada first, and then we're going to zoom all the way in for a highly detailed update on Montreal. So whether you're actively hunting for a home, maybe thinking about selling, or honestly just trying to make sense of the wild headlines, you are exactly where you need to be.
And this brings us to a question that I just know is on almost everyone's mind right now. Is the Canadian housing market finally working for buyers again? I mean, we've lived through years of sky-high demand, fierce bidding wars, climbing interest rates, the whole shebang. There's been a real tension between these persistently high prices and buyers hoping they might just finally get some leverage. The answer to this question isn't a simple yes or no. Actually, it's a really fascinating maybe, depending on where you look.
Okay, let's dive into this. Here is our roadmap for today. First up, we'll look at the shifting Canadian market. Second, national real estate trends. Third, we're seeking affordable alternatives. Fourth, we'll do a granular spotlight on Montreal. And finally, we'll wrap up with future market insights. Let's start right at the top with Section 1, the shifting Canadian market. We're going to look at the baseline national numbers for May 2026.
Okay, that baseline number sits at $702,079. This is the non-seasonally adjusted national average home price. Now, what makes this figure so incredibly significant is that it represents a 1.5% increase year over year. But more than that, it's the highest monthly national average home price we've seen in 2 full years. Literally, it's the very first time this measure has tipped over the $700,000 mark in 23 months. So on the surface, prices are absolutely still robust and even climbing a bit, but as you'll see, the dynamic underneath that price tag is totally changing.
Sean Cathcart, the senior economist of the Canadian Real Estate Association, recently hit the nail on the head. He noted that sellers' and buyers' expectations are increasingly aligned and prices have largely stabilized. This beautifully illustrates that massive expectation versus reality contrast we've seen over the last few years. Buyers wanted bargains, right? While sellers were holding out for those peak pandemic premiums. But now, the data is showing tightening sale-to-list price ratios and shorter times on the market. It means both sides of the table are finally finding common ground.
Moving right along into Section 2, National Real Estate Trends. Let's explore exactly what is driving the transaction volume we're seeing across the country.
So national home sales actually jumped 5.5% on a month-over-month basis in May 2026. That is the very first month in the year to see any meaningful upward momentum in demand. But wait, here is the fascinating nuance. This wasn't some organic nationwide boom. It was driven disproportionately by Ontario. Why? Well, an HST rebate on new builds essentially acted like a giant flash sale. It grabbed buyers' attention and totally pulled them away from existing homes. It's just the perfect example of how targeted government policy can cause a sudden, massive ripple in the national statistics.
The overarching theme here? Realistic but not pessimistic. We are clearly, undeniably watching a market adjustment in progress. Sure, some buyers and sellers might still be a little cautious because of broader economic uncertainty, but homes are moving much faster in certain regions. We're seeing prices remain down year over year in places like British Columbia, Alberta, and Ontario, and that's offsetting gains in other provinces. The main takeaway for you is that local conditions are absolutely shaping the national story right now. Which brings us to Section 3, Seeking Affordable Alternatives. We know prices remain stubbornly high. So how are everyday buyers actually reacting? Well, according to the 2026 Royal LePage Most Affordable Canadian Cities report, relocating is no longer a last resort. It's become a deliberate, proactive strategy. People are simply doing the math, realizing they just can't make it work in the biggest hubs, and they're moving. Lethbridge, Alberta, currently tops the list as the most affordable city in Canada, followed closely by St. John, New Brunswick, and Thunder Bay, Ontario. Get this, 61 out of 62 major Canadian cities actually recorded an improved affordability factor recently. So this is giving buyers real, viable options outside the major metros.
But who is actually packing up? A massive divide is emerging here. Gen Z and millennials who are, relatively unburdened by deep local roots are highly willing to cross provincial lines to chase affordability. Renters and young professionals are totally taking the leap. On the flip side, older, established homeowners remain tied down by career opportunities, family obligations, and deeply established social networks. They might dream of moving for sure, but they are much less likely to actually pull the trigger.
Now, what's really interesting about this slide is the sheer volume of people thinking about an exodus. 55% of respondents in the Greater Toronto Area, 48% in Greater Montreal, and 46% in Greater Vancouver would seriously consider relocating to one of those 15 most affordable cities. Nearly half of the residents in Canada's biggest, most expensive urban centers are weighing their options. Torontonians and Vancouverites are heavily eyeing Edmonton, while Montrealers are frequently looking toward places like Sherbrooke.
Which is a perfect segue into Section 4, a spotlight on Montreal. Let's shift our focus to the really granular data for the Island of Montreal as of June 2026. According to the latest data from the Quebec Professional Association of Real Estate Brokers, active listings for the Island of Montreal have surged to 11,076. That represents a very significant 16% jump compared to June of last year. But here is the catch. Contrast that with the total sales, which sit at 1,478. That's an 11% drop in sales. So we've got a very clear dynamic playing out. Supply is rapidly building up, while the number of actual transactions is shrinking.
Now, you might naturally assume that with sales volume dropping 8% down to $1.15 billion, prices would be plummeting too, right? Well, nope, they aren't. Median prices are remaining stubbornly resilient. For instance, the median price for a single-family home on the Island of Montreal hit $850,000, which is a 6% increase year over year. Condominiums also saw a 3% bump up to nearly $496,000. So we have more inventory, fewer sales, but prices that just aren't budging downwards yet.
So how in the world are buyers handling those sticky prices? The answer is leverage and aggressive negotiation. In June 2026, a massive 83% of property sales on the Island of Montreal closed under the asking price. Let that sink in. Only 12% went for asking, and a mere 5% went over asking. This is definitively a market where Montreal buyers have the breathing room, the inventory, and the leverage to negotiate hard. The days of blind bidding tens of thousands over asking, yeah, they're pretty much in the rearview mirror here.
All right, let's bring it all home in our final section, Future Market Insights, and connect all these dots. In real estate, there's a term called overheating. This basically happens when demand persistently exceeds supply, creating an intense upward pressure on prices. Usually, an overheating ratio over 70% means the market is running way too hot. What the current data shows us is that markets like Montreal are actively moving away from overheating. That rising inventory we saw earlier, it's acting as a natural cooling mechanism. This is fantastic news for buyers because it grants a rare actual window of opportunity to negotiate without panic.
So, knowing what you know now about the growing buyer leverage in the big cities versus that incredible affordability in smaller regional hubs, what is your next move? Would you stay and negotiate hard in a major hub like Montreal, or pack it all up for a cheaper mortgage out in a place like Lethbridge? It's a massive decision, but understanding these trends is absolutely your ultimate advantage. Thank you so much for joining me on this explainer, and keep learning.